All right, folks, part 3 from chapter 2. So now we're going to take those journal entries and T accounts and show how all this works out. So, turn the pen on here, right here. Going to make sure it works out. By the way, do you remember this from the debit and credit video? Hopefully you watched that video. Make it much easier here. DEADCLRC. That's the acronym that I use to help you guys remember how to do debits and credits. Okay? All right. So what is the mnemonic that I gave you for debits and credits? All right. So make sure, again, this is your quiz. Going to be up on Canvas. So make sure, Chapter 2, Question 4. A, B, C, or D. Okay? All right. So let's take a look. Here they're going to show you. So here's a couple things. If you take a look here, assets equal, so this is assets equal liabilities plus stockholders' equity. Okay? So a couple things. Notice the normal balance. Here they tell you assets increase with a debit and they decrease with a credit. The opposite is true for liabilities and stockholders' equity. By the way, so they're going to show you this framework, but if you watch that debit credit video, it's much easier. Here, by the way, when I went to do this, they had you trying to memorize all these arrows, and I think it's much more challenging to do. Okay? So here, let's take a look at the journal entries that we talked about before and prior. So on August 1st, cash, which is an asset, increased. So notice it increases with the debit, right? And common stock, notice how it's indented. So the second journal, so this is the debit, this is the credit. The credit is always indented. That's what this arrow is here for. And notice $10,000, that increased as well. Okay. This A stands for asset, and it's increasing. This SE is stockholders' equity, and it's increasing. Okay. Now look, August 2nd, we bought that logo, and we paid cash. So we had a logo as an asset, and notice that increases by 300, right? So it's increasing. And what we did was, again, you indent here, because this is the credit. You always indent the credit, and we use cash. So here, our cash is going down. So again, this is the one where all we did was we trade, oops, didn't want to do that. How'd that happen? Well, oh, there we go. Back. All right, slideshow, current slide. Sorry about that, folks. Anyway, so over here, change my color back. Boop. All right, so here this asset decreased. Don't do that. All right, so anyway, what wound up happening here, we just traded one asset for another. Okay, so notice this asset goes up, this asset's going down. Okay, and then finally this one, this is what's called a compound entry. Here what happened was we got software for $9,000 and we paid cash for parts, so this asset's increasing. This asset cash is decreasing, right? Decreasing right here. Here, increasing. And what we did was we have an account payable, it's a liability, and that liability is increasing right here. Okay, so notice we have 9,000 and 9,000. Everything stays in balance. Okay. By the way, that's what the journal entry looks like. So here, asset increasing, asset decreasing, liability increasing. Now, if you're wondering how they wind up in the debit and credit columns, that probably means you didn't watch that debit credit video. Because debit and credit, to let you know, all debit and credit mean in accounting is left and right. That's all it means. It doesn't mean anything else until you know what type of account it is. So just to let you know, if you haven't watched that video, you should stop it here and make sure you go back and watch it. Make your life a lot easier. Okay. By the way, here, so here's the general journal. And notice the general journal has everything in it. And then they have these general ledgers. These are for a particular account. So notice this is account 100. Okay. And account 100, this is cash. Account 186, this is software. So the general journal has everything. The general ledger has it by different account. So like here, it has accounts payable. What's accounts payable? It's account 201. Okay? So remember, General journal, everything. General ledger, particular account. And in this particular account, it'll always show you the balance, where you're at. Like right now, our balance is $9,000 debit. Right over here, our current balance now is $20,700. Okay? All right. Now, if you haven't watched that video over there, you got dead clerk. Which of the following increases with debits? Increases with debits. All right, make sure you write your answer down because it's going to be in the quiz that's going to be up on Canvas. All right. So again, if you take a look, they're just showing you this again. Here, this is DWIT. It's supposed to be debit. It's supposed to be a B here. All right. So anyway, you can see here's the T account. And notice here it's an asset. Assets increase with a debit and they decrease with a credit. And again, if you didn't do it before, here's dead clerk. And what this first D is, this first D stands for debit. And expenses, assets, and dividends. Those increase with a debit, okay? So those all increase with the debit. Now, let me change the color here, change it to red. This, C, stands for credit, okay? And liabilities, revenue, and common stock increase with credits. So notice here, our software increased, it's an asset, so we're going to debit it. Okay. Now, our cash, it's an asset, we'd have to decrease it, so we're decreasing with the credit. Okay. So see, we had to decrease it here, we had to increase it here. Okay. And then accounts payable is a liability. Liability increases with the credit. So there you go. There's your liability increasing with the credit. Again, debit, credit, dead clerk. Okay? So now, let's take a look. So if you go here, we're going to go back. We're going back through those transactions. This is that first one. There's the analysis where we got the $10,000 for the stock, right? $10,000 in common stock. That's when you analyze it. Now when you record it, you have cash is increasing. It's an asset. Common stock, stockholders' equity, that's increasing. Increases with the credit. So here, right here, you could see cash is an asset, increasing with the debit. Common stock, credit. Okay, and remember, that's all based on that dead clerk. Okay, just an acronym, make it easy to, so by the way, if it increases on one side, that means it has to decrease on the other. Does that make sense? I mean, so you're like, well, I don't know what side it decreases on. Yeah, you do. It's the other side. There's only two sides, right? How about next? So here's the next one. Here's that logo deal, right? So again, this was just an exchange of assets. So look what happens. We got this one asset's going up, so we debit it. This is another asset, it's going down, so we credit it. There you go. Here's our cash, there's our credit. We're lowering our cash, but now we got a logo. So here we had that exchange, just exchange of assets, okay? So you see, it's really not too bad, but it's fundamental. These fundamentals are what makes your life easier down the road. Not knowing these will make your life miserable down the road. And it'll make it, I don't understand anything. And you won't. If you don't understand this, you almost can't understand anything else. All right, folks, that's it for part 3. I think it was part 3. We'll be back with part 4 in just a minute.